So some people would argue, Charles, that this is one of the best markets that we've ever seen. There are a number of different elements that need to be considered in order to make that decision, and it's probably a subjective determination, but I'd love to at least consider those 4 factors with you. So what would you consider to be a perfect market?
Okay, so let me talk about an irony, because just a couple of minutes ago I said, don't go chasing some market, don't go chasing some condo. Just be conservative, buy something that has cash flow and pay it off. But your question is, what would a perfect market look like? So let's talk about that for a second. I look at it in 4 different factors. I think a perfect market to buy in would have prices that went down over time, which clearly we did. So our prices, depending upon what part of the country you're in, probably peaked around 06, 07, probably have gone down for 3-4 years and might be coming back. So just think about it. You'd like to buy when prices went down. That would be a good start. In terms of interest rates, well, since what we're talking about is owning property for the long term, what I would like to see are interest rates as low as possible. And here's the deal. We don't just have 50-year lows for interest rates right now. We are at record lows. And this, more than anything else, if you forget everything else we talk about, this is the one that's most important. Locking in a 30 or 15-year loan at the current interest rates keeps your payment so low for the duration that you own this property. This is the most important thing. This is a really, really big one, and clearly our interest rates are low, and this is what's making it very, very attractive to purchase these properties. And by the way, this is exactly why interest rates are low. The Fed is putting billions and hundreds of billions of dollars to buy bonds to keep interest rates low, so you go out and buy these properties. This is exactly why the Fed has taken so much money to keep the interest rates low. It's to make people like you interested and say, my goodness, I can own this property for this much a month forever? Yeah, I think I'll do that. And here's exactly where the rubber meets the road.
Well, until it's paid off, at least.
Until it's paid off.
Then you own it for a lot less every month.
Much less. Then it's just your taxes and insurance. So what else? What other thing would I like to see in the market? How about vacancies at a relatively low rate? And that's exactly what we have right now nationally, because what has happened over the last few years is that people haven't been able to purchase properties because they lost their property or they lost their job. It's a very sad thing, but what it has caused are a vacancy rate nationally that is at a record low. People either buy homes or they rent homes. Right now, they're renting homes. So if I had to ask what would be a perfect environment, it would be when vacancy rates are low, and that's exactly what we're seeing right now.
So far, so good.
And
what's the final?
The final one is, well, rents. I mean, obviously, rents are your income. So you'd like to be buying and you'd like to be owning in a period where rents are going up. And once again, we happen to find ourselves in a position where, because there are many, many people who can't buy or are too scared to buy a house, they're renting. Well, that's a simple supply and demand. What that's doing is it's dropping the vacancies and it's increasing the rents. And once again, nationally in almost every market, we have rents going up right now. So if there was a perfect example of when you would want to buy, this is what it would look like. The fact is, it looks a lot like this right now. Not a bad idea to be considering doing something like this for the long term.
Personally, I have found real estate landlording to be pretty darn easy right now. If I were going to try and describe a market that I would want to get involved, because I'm a lot like most of the real estate investors that I speak with, which I can't say I love landlording. It's not the top of my list of things that I find enjoyable, but when you describe the potential wealth development over a long period of time, it's irresistible. So that's, I look at what you're describing here and I say, no wonder it feels so good right now.
Yeah, I mean, in our market, in 2003, we hit a high of 13.1% vacancy rate. Our vacancy rate right now locally is 1.5%.
Okay, that's pretty tough to beat. So properties just aren't sitting empty. Now, what we want to try and do here, Charles, for the listener is help them understand what is the A to Z roadmap for getting started. And I try and break most of my processes down to 7 steps if possible and keep it consistent with most of the education we provide. So we've done that with the 100% debt-free for life class. We've done that with the business credit and funding secrets class. So let's go ahead and work together to put together a 7-step map for the listener in order to understand if I fall off the fence on the side of I'd like to move forward with buying another property, whether it's my first or my 10th, what should I expect to experience? Does that sound good?
Yeah, so here are the steps right here. The first step for you would be simply to contact an expert to counsel you through the process. You might be saying to yourself, this sounds kind of interesting. Yeah, maybe I want to learn more about it. That's exactly the first step, is learn more about it.
And I didn't mean to step on you there, but you're gonna give people an opportunity to either help them with this yourself and counsel to some extent at no charge, and then also guide them in another direction if you're not the perfect person for the job and they're somewhere else in the country. Is that right?
Exactly. So
Okay.
I'm going to invite you to give me a call. I talk about this stuff all day long with people, and I'm happy to chat with you. The fact is, I work in Colorado, so if you're someplace out of Colorado, I'm not going to work with you because I can't, because I'm licensed in the state of Colorado. But I know people around the country. There are people just like me in every market who are experts in buying, holding types of properties. But that's the first thing you want to do, is frankly learn more about this.
And you're willing to help answer some of the initial questions somebody might have, even if you steer them in another direction, right? That's what we were talking about.
Of course.
Okay.
I mean, I get a pleasure from doing that. You give me a call, we chat about it.
Fantastic customer service, by the way. I cannot speak highly enough about Charles. We actually had a conversation recently about people that, for whatever reason, the new trend, not calling people back. Charles is the exception. He is phenomenal. So you guys, that is a huge gift. Take advantage. Step 2.
Okay, so working with all types of real estate investors, what I always tell people is the thing that you're going to spend the least amount of time doing is the thing you should spend the most amount of time doing, which is to understand your lending options. Now, as it happens, Matt and I have been lenders in the past, so we understand this very well. Trust me. You're going to go out, you're going to try to find the best property, you're going to spend a year trying to get $10 off a property. What's much more important is that you understand your lending options, that you get yourself in a position to be able to maximize the rate. This is really where I want you to spend some time. Contact a lender and force yourself to understand that you're going to own this property probably and pay it off. Maybe you pay it off in 5 or 10 years, who knows what. But it is critical that you do the work to understand your position, that you make yourself as good a loan recipient as possible. This is where the big money is. This is step 2, and this is where I'm begging you to spend more time than you think you should.
So we'll guide you in the right direction on that if you don't have somebody that you're loyal to already. What is the third step in this 7-point roadmap, Charles?
It's really to learn your market, to understand what your market is doing. Now, the thing is, though, you've got to be a little careful here, because you can learn your market, and you can certainly learn what your market's done in the last quarter, in the last year. I'm an expert at my market, and I'm telling you, I can't tell you what's going to happen in the next 3 months, and I'm the first one to admit it. So learn your market, understand your market, but don't think that you know, or that any realtor you talk to knows what's going to happen in the future. The bottom line is, over long periods of time, residential real estate goes up about 6%. Sometimes it goes down 20%, sometimes it goes up 30%. There is no way you're going to know what's going to happen in the next year or two, and that is a risk. That's something you have to consider. That's why Matt said a few slides ago, be conservative, make sure you've got cash flow. But regardless, learn your market, understand what's going on, so you're walking into this with as much knowledge as you possibly can have.
So realistically, if we were considering a timeline on these first 3 steps, Charles, what would you say would be a reasonable amount of time to spend on these first 3 steps?
I don't know, a month or so. I mean, if you really work at it, you could probably do it in a week. I'm assuming most of you are normal people like we are. You have jobs, you work during the day. This is something you're talking almost as a second job, almost as a second career. Give it a month and don't rush. And by the way, just don't rush. Don't work with a realtor who says, well, we got to buy this in the next 7 days because here's what's going to happen. That right there is a really good indication that that's not somebody you should be working with. You should be working with somebody who has patience, who understands that it takes a while to learn this market, and also what you need to do next, which is begin to make some offers. So you have a lender ready to back you up, you learn the market, then you go out and you start actually looking at properties, making some offers, and hopefully working with a good realtor who is going to represent your interests as well as he or she can.
And it's not unusual to have to make multiple offers, right? So if you didn't get an offer accepted, you shouldn't allow that to discourage you from pursuing the goal of obtaining more real estate, right?
My average is 18 offers per closing. Now, that's just me. That's what I do with my clients. It may be more for you. It may be less for you. But for what we do, we're right about 18 offers per property that we close.
Persistence, consistency, determination, a really important piece to this if you want to get from step 1 to step 7. You know, I've gone through this myself over and over again, and it is just not enjoyable. I said it before. I mean, buying property for me is not an enjoyable experience. It's frustrating. It's very stressful. You can't help but get emotionally involved with the experience. And I want to encourage you listening that if you're going through this and you haven't been through it over and over again in order to desensitize yourself to some of that, that's normal. Wouldn't you agree?
Not really. To be honest, most of my clients actually enjoy this. So
okay.
I'm looking at Matt saying, I don't know what to tell you. You know, most of my folks actually enjoy it. But I'll tell you, something about me, I'm going to just tell you a little secret about myself. I can't screw in a light bulb. Most of my clients actually can put up doors and they can do all sorts of handy stuff, and they actually enjoy this way more than you might think. As it happens, I'm just completely useless with my hands, but even I kind of like doing it. It all comes down to who you are. Some of you might not particularly like this. I think a lot of you might actually enjoy the process. It just comes down to who you are.
On a side note, Charles does have on Velcro shoes.
I'm also a bit cheap, and Matt likes to make fun of my $10 Walmart Velcro shoes,
I think. Okay, so what is the next step on this roadmap, Charles?
So once you get a property under contract, you're going to want to do a professional inspection. And unless you are a professional inspector, which is pretty unlikely, hire someone, $150, $200, $250, do the right thing. Get all the inspections. Make sure that you're buying a property that is as fit for you as you possibly can. Your real estate agent will be able to help you with this. Just make sure that you've done everything you can to vet the property.
I mean, that is a dangerous step to avoid.
Yeah, I have a couple of clients who, you know, I've got one guy who's bought 18 properties and held them. My record, I think the top one I have is 23. These guys are actually inspecting their own stuff now, and I'm okay with that. But really, 99% of everybody out there and the people I work with, hire a professional inspector. Make sure it's the right property for you.
Excellent advice. 6th step.
Well, this is really where it gets interesting, is the loan process. So you've already figured out that you're now as capable of getting a loan as possible. You're working with a good, solid loan officer. What happens for the last couple of weeks after you're at inspection is you're going through the loan process. And it's not quite as easy as you might think, even for folks who are very qualified. The lending process is the lending process. It's a step. It's what you have to get through. All I can advise you is if your lender wants something, give it to them. If they say, I need this, don't say, I don't like you, and don't say, I'm not going to give it to you. The poor lender, the lender is just getting requests from his underwriter, and they have to get this. So it's a process that needs to be gone through. You're going to go through it. It's not going to be pleasant the whole time, but it's step 6.
And step 7, right? Time for celebration?
Exactly. Then you close on the property. And I will tell you that in my market here, we're generally getting properties rented before we close. It's a little game we have to see if we can do that. So once we get past inspection, we usually have a couple more weeks to close, and we'll start putting up for rent signs and putting stuff on Craigslist. Simply because our vacancy rate is so low and our rental market is so strong, we generally can actually have somebody ready to go by the time you close. That's pretty cool if you can do that. If you can't, if it takes a few weeks, that's fine. So you close the property. Maybe you actually have to do some work before, maybe you don't, and then you get it rented, and then the cash flow starts coming in.